Costco's shocking move has customers screaming. I'm your host, Steve Van Metre, and thanks for joining me today. On our show today, Costco's latest announcement is enraged its customers. I'll show you what just hit and why more retailers are next. Stay tuned. Plus, my subscribers shorted the dollar this week, and those trades are crushing as stocks blow up. Want to trade the markets and win? Stay tuned to the end of the show to find out how my subscribers are winning big and how you can too. Now, let's head over to Bloomberg, where we picked today's story up to find out what Costco's big announcement that has customers absolutely outraged. As Costco posts profit that falls short of market expectations, is not about profit going down. It's what companies do in response to declining profits. One of those is already outraging Costco's customers. The other isn't going to make them any happier. Let's take a look at what's driving what's happening in the retail space. As U.S. consumer confidence declined in February by the most since August of 2021 on concerns about inflation, tariffs, and employment. Because what this means for consumers is that costs are going to go up. It means tariffs are going to drive consumer prices even higher than they are already likely to go. And on top of that, they're worried about losing their job. When that happens, spending drops. And for retailers like Costco, well, they're faced with one decision as prices go up, and this one their customers don't like. And consumers are willing to spend, but if they're being choiceful about what they buy, this is according to CEO Ron Vacris, who said on a call with analysts, shoppers could become even more selective, and some items such as meat get more expensive, and tariffs potentially affect prices. And what he's saying in a very nice way is that consumers are running out of money. They cannot afford higher prices, but that's not the issue. That's not why customers are outraged, because there is a big reason they shop there, and that's for low prices. But my friends, it's changing and soon. But let's take a look at the dynamics of what's hitting the retail space. If we look at advanced retail sales, this inflation adjusted against the University of Michigan Consumer Sentiment Survey, because when you see what Costco just announced, it's going to make perfect sense of what's going on in the real economy. And what we can do is go back to the late 1990s. We see a peak in real retail sales, and as it starts to slow down, look what happens to consumer confidence. It peaks, it starts to decelerate, and then it comes crashing down, and that causes real retail sales to plunge, drop negative, and put the economy right into the dot-com bubble. Let's move forward to right around 2005. What do we see? Real retail sales peaks once again, but it's happening at the same time that consumer confidence is going down. Then consumers get really confident, but it doesn't last, and we see that plunge. And retail sales were already on a glide path lower that contracted right into the global financial crisis. So what you start to see in the data is the reason retail sales decline is because consumers lose confidence. And what are we hearing in the news right now? They're losing confidence because prices are going up. And if the tariffs hit, they're going to drive prices even higher. And on top of that, the labor market is getting weaker, which makes Costco's announcements even more shocking, because look where we're at now. We've had 3 years of largely negative real retail sales. We can expect that to go lower, and we're already seeing early signs from the University of Michigan and Conference Board surveys that confidence is headed lower. That means spending's about to drop, and it makes perfect sense. Why? Because Costco's CEO, in a very polite way, again suggested that his consumers, his customers are running out of money, and it makes perfect sense, because when we look at total incomes from workers, that in the function of average hourly earnings multiplied by average weekly hours of production and non-supervisory employees, that's shown in red on a year-over-year rate of change against real retail sales still in blue. What do we see? As real retail sales peak and start to slow down, incomes eventually peak, and then they both head down together. We see that happen right around early 2006 as income growth peaks, starts to decelerate, and you can see retail sales go down. It's all a function of rising prices are impacting the bottom line for households. They just can't afford as much, so they're spending less, and that's what's happening at Costco. And that is what makes it even worse, as you're about to find out what Costco just announced. Let's move forward to 2011. What do we see? The same effects, as we note that income started to decelerate, and that brought a slowdown to retail sales. And we can see right around 2022, there was a big drop off in spending, happened to match the peak and where incomes were. We see right now incomes are flatlining. The hope is they're going to turn around and drive sales, but we know they're not. And that's why what the CEO just said is outrageous. and enraging many of its customers. As he says, it's difficult to predict the impact of tariffs, but add the company is working to minimize price increases, indicating that Costco is indeed going to be forced to raise its prices. We're going to see retailers all over the country doing the same thing. And this is a challenge because right now consumers look to companies like Costco to save money. What they're going to find out is their dollar at Costco goes far shorter. Now, if this irritates you, if you're outraged, hit the like button, drop a comment below. What do you think of higher prices? Are you fed up? I want to know, because a third of Costco's U.S. sales are imported from other countries, and less than half those items are from China, Mexico, and Canada. He said the tariffs are very fluid right now, so it's hard to really give any predictions of what we can do, but we're prepared. Well, they are prepared. That is to raise prices. We know that's coming because look at what he had to say. In citing tariff implications for groceries specifically, the CEO warned that margins are much tighter in that area, but Costco will work with suppliers to mitigate the fallout from consumers. And so what he's saying is, look, we're going to go to our suppliers. We're going to ask them to lower their prices. We know they're going to say no, and then we're going to be forced to raise our prices because the margins are too thin. We can't absorb the tariffs, and that means food prices, my friends, are headed up. So you think about the American household, what they're struggling now with inflation. They know rents are high. Food prices now about to go even higher due to tariffs, and energy prices. Well, there's one thing that's coming down, but the problem is everything else is headed up, and now you can see why Costco's customers completely outraged. But something that is going up, you should be riding the wave of, that's your trading account. As our subscribers shorted the dollar, we told them to buy right here when we saw this switch in momentum. But it's not just a change momentum that matters, because it just buying on momentum signals doesn't always work. We noted the trend was up, and look, the short dollar trade has soared in the days following, lining our subscribers' pockets. Now, if you want to be on the right side of the markets, hit those links in the description below. Grab those coupon codes, sign up for your 30-day free trial. Stay tuned to the end of the show for more information, because I'm going to show you why what's happening at Costco is now spreading to other retailers. We've talked about the discretionary side of the economy and why it takes a hit when income growth slows down and prices rise, because again, households have to focus on rent, food, and energy, two of those going up. And look what Ross had to say. They said even steep discounts aren't swaying worried customers. Now, are you worried about rising prices? Are you worried about being able to afford all of your bills? Hit the like button if you are. Weigh in the comments. Love to know what you think about what's going on, because Ross has been luring new customers by offering popular brands such as Kate Spade, Calvin Klein, Adidas, and Juicy Couture at steeper than normal discounts. But for the past couple of months, however, the company said economic volatility and unseasonable weather had a negative impact on the number of shoppers in its stores. And it makes perfect sense, because again, this is all happening in real time. You're seeing the effects of a stagflationary recession starting to build. Prices are going up. The unemployment rate starting to rise. Consumers' wallets are getting stretched. They have to cut their spending on the discretionary side. And what's Ross saying? Very clearly that we're lowering prices and it's not working. We're seeing less foot traffic. And let me show you why as we turn to yesterday's unemployment data. As we look at initial claims, they came in at 221, down 21,000 from last week. And this remains very low on a historical basis. But look at the continued claims, because it's not just about who's losing their jobs today. It's about those who are on unemployment and cannot get another job. Look at this. On a seasonally adjusted basis, rose 42,000 to 1.897 million Americans. But on a non-seasonally adjusted basis, the number surged by almost 69,000 to 2.231 million Americans on unemployment who can't find another job. And this is a major problem, because the government is laying off now on top of the broad economy. And what we're seeing is a huge slowdown. People are hitting the unemployment line without any prospects to get work. Of course, that means companies like Ross are going to face a big problem. There's going to be even less foot traffic. And what Costco is going to find out is people can't afford higher prices. But let's take a look at the impact of the labor market on retail sales. As we look again at real retail sales in blue, shown on a year-over-year rate of change against continued unemployment claims in red. And you can see how that deceleration in retail sales starts the process. And what it leads, of course, is to less demand for labor. Right around early 2000s, the labor market starts to unwind. People hit the unemployment line, can't find another job. And you can see without their regular income, their spending power declines, and real retail sales plunges us right into the dot-com bubble. You see that happen again right around 2006 into 2007. 7. The decline in retail sales back feeds into the economy. Continued claims bottom out. They start to head higher. That lack of income spreads it all across the economy right into the global financial crisis. And here we're at now. Retailers have been hopeful that things were going to turn around. And what are we hearing from Costco? Again, we're going to raise prices. We know our consumers can't afford it, but we don't have a choice because we have to defend our margins. What that means is real retail sales likely to come down, the unemployment rate likely to head higher. Now, if you're concerned about losing your job, I want to know, hit the like button and weigh in the comments what's going on at your employer, because the U.S. jobs report says, well, everything's okay, even though the labor market is softening. And here's what I want you to know. We mentioned this the other day. Don't worry about what the headline report says. It's all about the details underneath. Let's take a look. Because non-farm payrolls increased 151,000 in February after a downward revision in the prior month. The unemployment rate rose to 4.1%. Of course, we've heard from Fed Chair Powell that it was going to peak around 4.1 to 4.2 and pull back, and now it's heading higher again. But the real question is, because when you look at the headline, why does it always appear that there's jobs being created when other data shows there's not? And that's why you can't focus on the headline non-farm payroll number, because it really doesn't tell you anything, because the continued unemployment claims is telling you the real story. There's nearly 2.3 million Americans receiving unemployment claims that have been there for more than 1 week with no opportunity to find a job. And here's why we don't worry about what that headline number says, because when we look at the total non-farm payrolls shown in change of thousands of persons in red against the unemployment rate, what you can see is heading into the 1970s recession, well, the number was positive. In fact, it was positive after the recession started, despite the fact that the unemployment rate was surging. You could go back to around 1974. What do you see? Positive payroll numbers, despite the fact that the unemployment rate was again surging higher. You see that happen again in the late 1970s, going into the 80s recession. You see it happen right around 1990 as we go into another recession. Again, positive payroll numbers. You see it happen around early 2000. The unemployment rate's rising, but the government says, nope, there's jobs being created. And then it happened again right around 2007 as we headed into the financial crisis. Americans losing their job, but government says, nope, don't worry, there's plenty of jobs being created. And the issue here is the policymakers, such as the Federal Reserve, they look at that headline number, they're going to say, well, the labor market's slowing, but there's jobs being created, but everybody knows the truth. Now, I want to know from you, are you worried about losing your job? Hit that like button. Maybe you've already lost it. Weigh in the comments. Maybe it's coming soon. Love to know what's going on, because that sets a weak backdrop just as President Donald Trump's policies raise concerns about the broader economy. Inflation has proven sticky in recent months, and consumers are starting to pull back on their spending, which sustained may lead businesses to rethink their hiring plans. And no, it's not going to cause them to rethink their hiring plans, because they've already done that. What it's going to cause them to rethink is their existing workers. They're going to cut hours. They're going to cut jobs, because when inflation goes up and incomes don't follow through, spending has to go down. That's exactly what we're hearing from Ross. That's what we heard from Costco, saying, look, our customers are being pickier. No, it's not that they want to be pickier. They only have so much money. And now on top of that, they're going to raise prices. You can see why their customers are outraged. The near-term path of policy is cloudy, and so is the economy's path. No, it's not cloudy. It's certain. We're headed into a stagflationary recession. The data is very clear about what's coming, but yet everyone thinks something magical is going to come along and change it. If the government stays the course on big tariff hikes and spending cuts, those policies will continue to weigh on job creation in the next few months, likely pushing the unemployment rate higher. That's right. The unemployment rate is likely to go higher, which is what we've been saying. And despite the fact, we'll continue to likely see positive non-farm payroll numbers. But again, it's not about the non-farm number, because there's another report that comes. It's called the Household Survey. And the jobs report is composed of two surveys, one for businesses, which produces the payrolls figure. That's that headline number that everyone fixates on. And the other is for households, which publishes the unemployment and the participation rate. The household survey has its own measure of employment, which fell by nearly 600,000, the most in over a year. So could you imagine if that headline non-farm payroll number, instead of printing 151,000 jobs created, said there were 600,000 jobs lost? Well, that's what households are saying. They're saying they're losing their job, and they're losing it fast. If you think the household survey is more accurate, hit the like button, weigh in the comments, because the participation rate is telling us what's really going on in the economy. It's not cloudy, it's clear. The share of the population that is working or looking for work fell to the lowest level in 2 years, largely along men. The rate for workers ages 25 to 54, notice prime age workers, held steady at 83.5%. So what does it mean when people give up looking for a job? Well, it means they've lost their job, they want another job, and they realize there is no work, so they give up. And that's the participation rate. Take a look at this, because when we see what happens as you go into a recession, the participation rate decelerates, as you see here in blue, against a rising unemployment rate. So we know the unemployment rate is likely to head higher, and it's very clear why, because what people are telling us that are unemployment is there are no jobs. And you can see that going into the global financial crisis, people gave up looking for work as the unemployment rate skyrocketed. And now what are workers saying? There is no other work. And what does that tell us again? Unemployment rate heading higher. Feds got the call wrong, just as they always do. Economists are also paying close attention to how labor supply and demand dynamics are impacting wage gains, especially as inflation risks heating up again. The report showed average hourly earnings increased 0.3% from January after a downwardly revised 0.4 gain the month before. So what are we seeing in wage gains? It's decelerating, but it's not about that, because you always see wage gains during recessions. That's because those who do have jobs tend to get pay raises. It's about the hours that people get. And what do we find? Hours worked did not go up. They were flatlined. That's a problem, because they've been on a downward trend at a very low level. So these pay gains are only going to be very minor in the take-home pay for workers. Not going to drive the economy, not going to be able to afford Costco's higher prices. And yet Treasury Secretary Bissett warns of detox period for the economy, touts Trump's call. Let's take a look at what he says, because what he's telling us is on the headline, there's going to be adjustment period. And well, it's not going to be easy. It's going to be difficult. But if we get through this, things are going to look better. I want to know what you think. Do you think things are getting better? Weigh in the comments, because the market and the economy have just become hooked, and we become addicted to this government spending. There's going to be a detox period, and it makes perfect sense. As the government cuts its spending, yes, there's going to be jobs lost. It's going to impact the economy. We know that. And there's no put when referring to the stock market. He said the Trump call on the upside is if we have good policies, the markets will go up. And that's very different than what we saw from Trump's first term, where he talked the market up almost every time there's a microphone in front of him. Now focused on the economy, saying the stocks can go down. There's no put. And it's a much needed course adjustment, Bissett said. We'll see whether there's pain. Well, it appears there's pain. If you're in economic pain, hit the like button way in the comments, because I'm confident we have the right policies. It'll be a very smooth transition. Well, it doesn't appear to be smooth for all those workers on unemployment right now, and it doesn't appear to be smooth as people look, and their outlook going forward is getting worse. And Bissett complained that his administration hadn't got the credit for the drop in energy prices in weeks, and reiterated that the deregulation Trump's team is planning will boost the economy. And maybe it will, but will it be too late? Because the reality is, when energy prices are going down, what is it telling you? Is demand for energy is falling. And in our economy, that is a major red flag that's confirming exactly what we're hearing from Costco as customers get pickier. We're hearing it from Ross. They're saying people aren't coming and spending. We're validated this in the labor market from the participation rate is slowing down as people have less money. And all it's telling us is as more people hit the unemployment line, that their spending on energy is going to drop. That's what it's telling us. Things are getting worse. But just because the markets are getting worse and the economy is getting worse doesn't mean your trading account should be getting worse. Check this out. Our subscribers now up 1.63% on our short dollar trade. Here was a note we put out the night before. That's right. We published our reports the night before with those, so you can get a lead on the trades for your next day. That trade, again, now up 1.63% for our Momentum Timer Pro subscribers. As I showed you before, we noticed a dip of momentum, but then momentum turned to the upside. The trend was validating it. Our report said this was a buy at open right here, and now it's headed higher. And we think that trade could go up a whole bunch more. Now, we run screens on momentum across a broad range of equity, commodity, bond, and currency ETFs, and we look at momentum over multiple time periods. But here's the best part. You don't even have to read the reports. Now, if you want all the technical data, we give it to you, but we show you every tradable signal on the reports, and I go through all the trades and tell you these are the best ones to take. We fully backtest our report, so we know it works. We give you risk control levels, a full update every week on all of our open positions. Not to mention, I disclose how I'm trading the reports. That's right, I trade right alongside you. Plus, you get a 30-day free trial. Why do we do that? Because we're so confident that you can make money trading that your first month is on me. And with that, I want you to hit those links in the description below, sign up, and start making money trading. I'm your host, Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.